Also, for more on the markets, we're joined by Tom Hayes. Thomas Hayes is the chairman of Great Hill Capital. Thomas, great to see you. Good to have you on this morning with us. The markets have had a pretty wild last few days. We saw the Dow take a big swing yesterday with most of the volatility attributed to the new Omicron variant. So what are you expecting for markets today as we close out the year and even throughout the rest of this month?
Hi, Brad. Well, thank you for having me. I think part of it's certainly been the Omicron for sure, but I also think that the market's a little worried that the Fed has been very aggressive in wanting to accelerate the taper. I mean, it's interesting to see Chair Powell. He spent the last year and a half trying to convince the world that inflation was transitory. Pretty much the second after he got reappointed to the Fed for another 4 years, all of a sudden it's permanent and we've got to accelerate the taper right away. And I think that what we want to keep in mind here is we don't have all the information on Omicron. We are in an information vacuum, and it would be wise for the Fed to wait till they have full and complete data before they accelerate. There's no reason they can move ahead with the existing taper timeline, but accelerating in the face of what might be a little bit slowdown in growth. If this is as bad as Delta was, we saw a little slowdown in August and September. They could always come back the next meeting and reaccelerate it with no problem. But I don't think the market likes two information vacuums. One, how serious is Omicron going to be? And two, now is the Fed going to be tightening in the face of this uncertainty? So these are two things we don't like to see. The other thing that we have to keep in mind is commodities have been rolling over for the past weeks and months. If you look at energy, if you look at hogs, if you look at grains, soybeans, et cetera, and those will be felt by the consumer on a lagged basis. So we're seeing the prices roll over, lumber, metals, et cetera. We'll start to see that in everyday life 3, 4, 5 months down the road. So they may be kind of looking in the rearview mirror for their policy. Prices were up 3 months ago, 6 months ago, but they've already started to come down naturally on their own. So I think they just need to use a little prudence moving forward and not fall into the trap that he fell into in December of 2018 when he kept raising rates even though the data was slowing, and it caused a 16% crash that was completely unnecessary.
Okay, and so I do, for the sake of this conversation as well, and for our viewers to round this out, I want to play a clip of Fed Chair Jerome Powell from earlier this week who shared some thoughts regarding the impact that the new variants could have on inflation. I believe we have a short clip of that.
The recent rise in COVID-19 cases and the emergence of the Omicron variant pose downside risks to the employment and economic activity and increased uncertainty for inflation.
And so as you were outlining some of the risks that we run with prematurely tightening, if you will, where are some of the biggest impacts? If we do see the Fed continue to accelerate its timeline, what would some of those earliest impacts look like?
Yeah, well, you've seen it in kind of the cyclical and value stocks. Anything related to the reopening of the economy has been hit the hardest immediately. So I think they can take the extra 4 weeks to just wait. But if you step back a little bit, yes, we got some bad news from the CEO of Moderna, was uncertain whether his vaccine would work. But the CEO of Pfizer, on the other hand, was pretty confident, number one. And you also have what few people are talking about is the Paxlovid, which should be coming down the pike, which they're pretty sure is going to be helpful against the Omicron, and that's showing 89% efficacy. So we just have to wait for approval on that, like we saw with Merck in recent days, which is less effective. But if you take a step back and you look at the economic data, has been strong, okay? So let's assume this is like other variants, which were basically a blip for a month or two, and we'll work through. Earnings estimates for next year are expected to grow 9%, which means we should see in 2022 high single digits to low double digit returns in the S&P 500, albeit we're going to see a lot more volatility because the market is going to discount the reduction of liquidity. We've been so accustomed to liquidity for the last year and a half. We know that's coming out of the system with the taper and then with rate hikes probably towards the second half of next year. So it's something to keep in mind, but we should still see good returns. The other thing you have to keep in mind is that most of the stock market has actually been laboring sideways since May of this year. So with the exception of FANG and Microsoft, you've seen a lot of these cyclical value reopening trades going sideways or going down since May of last year. And I think there is a catch-up trade in the works that we can take advantage of moving forward.
Tom, I only got about 30 seconds left. You previously said that we may find ourselves in an information vacuum of sorts over these next few weeks regarding the variant and the Fed. How crucial are these next few weeks to the markets? And what are you suggesting to clients, especially given that information vacuum of sorts, how they would conduct themselves in their portfolio during that time?
Yeah, I think the opportunity is to get out your shopping list, use the volatility to your advantage. Slowly on down days, we're adding to high quality. One of the names we love is Boeing. You just have to take a 6 to 12 month view. Are there going to be more people flying 6 to 12 months from now that are flying today? And the answer is probably yes. We saw it in the last week with the TSA pass-through numbers at 80 to 90% of pre-pandemic levels. 2.4 million people flew on Sunday alone. Right. So this is an opportunity. It's still down 57% from its pre-pandemic highs. We think there's great opportunity, particularly with the imminent recertification of the 737 MAX in China.
Thomas Hayes, who's the chairman of Great Hill Capital. Tom, appreciate the time as always. Thanks for joining us here on Wake Up with Cheddar. Guys,